Hello friends, myself CA Yachana Mutha Bhurat. Here we are going to discuss the first chapter of GST in India and introduction totally in English, especially for South India students. This is regarding a fast track batch which is going to be held in Bangalore from 16th of March to 23rd of March in Advent Learning Academy. So you can contact these people. The contact number are given in the description link and you can visit their website as well. So friends, here we are going to start our first chapter. This batch, I tell you, especially for designed for South India students on the huge demand for the English, totally English language. So we are going to start our first chapter, GST in India and introduction. The basics of GST. Here we are going to discuss. So, ma'am, why GST? Why not earlier law? What was the deficiencies in the earlier law system? Why GST has come? What are the benefits of GST? What is the structure of GST in which it has come in India? All these things we are going to discuss here in this chapter. So, let us start from a base. So, what is tax? Is it an option? You want, you can pay. You don't want, you can't pay. No. It's not like that. It's a mandatory levy. It's a mandatory financial charge upon a taxpayer by the government. Why do government need funds, ma'am, at all? So, students, tell me one thing. How these bridges are made, how these roads are made, how the infrastructure government develops. The revenue to the government is only through taxes. So, they collect taxes. It is a mandatory financial charge. It's not an option. You want to give, you give. You don't want to give, you don't give. It's not like that. It's a mandatory financial charge. Now, there are two types of taxes. I know you are in CA final level. Ma'am, we know all these very well, but we have to start it from scratch and base and move till end to score exemption. So, we are starting it like this. Now, two type of taxation system. What? Direct tax, ma'am, and one is indirect tax, which we are going to study here. So, what is direct tax, beta? So, direct tax is where the taxable person and the person effectively paying the tax are same, like income tax. So, if I am earning 1 crore rupee a year, I have to pay the tax on my own. I can't recover it from you and pay it to the government. That is what direct tax. And what do you mean by indirect tax? Like GST, like it was earlier excise, VAT, service tax. These all were what? Indirect taxes. That is where the taxable person and the person effectively paying tax are different. That means what? For example, I am selling the goods to B. Yachana is selling the goods to B. In that case, what will happen? For rupees 1 lakh, the GST of 12,000 has been levied for assuming GST of 12,000 has been levied. What B will pay to Yachana? B will pay to Yachana 1,12,000, out of which 12,000 will be paid to government by Yachana, and 1 lakh would be retained by Yachana definitely, and 12,000 would be paid to government on behalf of B by Yachana. This is called as indirect tax, where the taxable person is Yachana and the person actually bearing the burden of that tax is Mr. B. Mr. B would be finally bearing the tax burden. The taxable person, the responsibility to pay taxes, whose? Yachana's. But the person who is ultimately bearing the burden is who? Mr. B. So, the taxable person and the person effectively paying the tax are different. So, as the feature of all the indirect taxes, maybe it excise, may it be VAT, may it be any other indirect tax like service tax. Now, all these has gone away and the GST has come. Ma'am, why all these have gone away? Why GST? So beautiful laws government has made, excise, VAT, service tax, so many laws, so beautiful laws. Why GST has to come? There must be some deficiency. Yes, there was definitely some deficiencies, because of which earlier tax law has to go and the new tax law GST has to come. We are not going to discuss much detail in this because earlier tax has already been gone. We have already come ahead of the transition. So, we are going to discuss a bit about what are the deficiencies in earlier tax laws. So, the cascading effect of taxes on account of levy of non-VATable CST and inclusion of SENVAT in the value for imposing VAT. So, I'll take some examples to understand all these things. The major taxes, what were the major taxes earlier? Ma'am, it was excise. We know it very well. It was VAT and it was service tax. We are going to discuss these three. There were so many taxes in the earlier law which has been subsumed into GST. But we are going to discuss these three. These three were important sources of revenue for the government. So the excise. Excise was levied by whom? Central government? Yes. VAT by state government. Service tax was the levy of central government. Levy of central government, revenue of central government. So here, excise was levied by central government, VAT was levied by state government, service tax was levied by again central government. The cross credits were not available. If you remember, the credit of VAT was not available against excise. Excise was not available against VAT, and so on. Especially when there was central and state. Non-availability of cross credit was a major problem. The credit of VAT was not available against service tax. The credit of service tax was not available against VAT. For example, I am a chartered accountant. I was a chartered accountant before GST also. So, at that time, I have started my classes and all that, and what I have done, I have purchased a laptop for the same. So, Yachana has purchased a laptop. Laptop for what Yachana has purchased? Yachana is a GST consultant. She is providing output GST services. Output services. She is providing output services. GST consultancy services. It could be service tax consultancy services. It could be any consultancy services. Yachana is providing. So, we are discussing the pre-era. So, Yachana was providing some consultancy services for which she required the laptop. She has billed the client Mr. B 1 lakh rupees. Okay, the client for the consultancy services, Yachana has billed 1 lakh rupees, and the service tax was what? Here, the service tax was for assuming 15,000 rupees has been levied on this. 1,15,000. What will happen to this 1,15,000? Mr. B has to pay to Yachana. He want to get his work done or not? So what Mr. B will do? Mr. B will pay to Miss Yachana 1,15,000 rupees. So, tell me one thing. Yachana has also purchased a laptop worth rupees 50,000. Worth rupees 50,000 laptop Yachana has purchased, on which VAT has been levied. Assuming 5,000 VAT has been levied. 55,000 rupees total. This laptop Yachana has purchased from Mr. A who is dealing in laptop. Mr. A who is dealing in laptop, Yachana has purchased from him. So, Yachana has to pay Mr. A how much amount? 55,000 rupees Yachana will pay to Mr. A. Yachana has paid 50,000. Yachana is very sincere in paying the funds, and she has paid 55,000 rupees to whom? To Mr. A, out of which 5,000 VAT Mr. A will pay to the government, state government. Correct? Nobody can hold the taxes. So, Mr. A has to pay to the government. He has paid 5,000 rupees to the government, and 50,000 he can very well hold the amount. Now, what will happen in this transaction? Yachana has paid 5,000 rupees VAT, which is a tax, which is a state levy. Correct? Yachana has also collected from Mr. B 15,000 rupees of a service tax, which is a central levy, and which will be paid by Yachana to the central government. How much? 15,000 rupees. So, the set-off was not allowed earlier because one was central levy, one was state levy. Against 15,000, Yachana cannot set off the VAT credit of 5,000. So, non-availability of cross credit was a major problem. This 5,000 is definitely going to become the cost for Yachana. Cost for Yachana, because she cannot take the credit. The cost of the goods or services will increase. The cost of service of Yachana will definitely increase. Had she be able to take credit, she has to pay to the government 10,000 rupees, but this is not the case. So this was a major deficiency. Now in the GST era, if Yachana purchases laptop, now in the GST era, I'll tell you, if Yachana purchases laptop and the laptop will come for example, the same transaction I will repeat. From Mr. A, Yachana purchases laptop of 50,000, on which what will be levied? GST will be levied for 5,000. Total comes to 55,000. And the consultancy service, same GST consultancy service, for all example, Yachana is providing to Mr. B continuously, for which Yachana has received 1,15,000 rupees. So now what Yachana can do? Output GST, input GST. She can set off the credit on outward supply. On outward supply, Yachana has an output of 15,000. 15,000 less. See, you are a CA final students. You must be very well aware of all these things. We are discussing a bit. We are going to discuss ITC concept and all a chapter bit in detail. But here we are going to see overall, the overall GST full things we are going to see in this introduction chapter, which will give you a brief idea of each and everything. Correct? So now outward supply, Yachana has to pay how much? 15,000. Now input ITC, input tax credit, Yachana has already paid to Mr. A 5,000 rupees of GST. She can take the credit, and now Yachana has to pay to the government 10,000 rupees. 10,000 rupees, she can take 5,000 credit. So this 5,000 is not going to become cost for Yachana in GST era, which was otherwise a cost when Yachana was in this era, which pre-GST era, this was becoming a cost for Yachana. So friends, so this is an example of service tax era, the service provider. The similar is applicable for the traders, the similar is applicable for the manufacturers, for everyone, the non-utilization of cross credit was a major problem. One thing. Second, I tell you one thing, I'll take a simple example of a manufacturer as well. On manufacturing, which tax was levied? Excise. On sale, VAT, and on service providing, service tax. Now only one tax, GST. So for example, we'll take an example of a manufacturer, Mr. S. Mr. S has manufactured a product worth rupees 1 lakh. When he produced the product, the excise duty will be levied. Excise duty, for example, 10,000 rupees, we'll assume. 1 lakh 10,000. Correct. Now this is what Mr. S has manufactured a product. Now after manufacturing, he is not going to keep it with him. He is definitely going to sell it. On sale, what tax was levied? VAT, ma'am, VAT. For example, VAT at the rate of 10%. That would come 11,000. So in this case, can you see VAT is levied on inclusive of excise? Tax on tax, cascading effect. This was a major problem. VAT was levied on the value inclusive of excise. Two taxes are levied on a transaction. One on manufacturing stage, second on sales stage. Excise on manufacturing stage, VAT on sales stage. Then VAT is levied on the value inclusive of excise. This was the biggest problem. So in this case, what should be done? So these were some of the deficiencies which we are discussing for 2 minutes. Then we'll jump to GST and then we'll study only the GST. Then this was one problem. Next problem was, like, for example, I'm doing an interstate sale. Mr. A is selling the goods to Mr. B. Interstate. Do you remember in interstate sale which tax was levied? If you are not wrong, it was CST. Correct? CST was levied on interstate transaction. The credit of CST was not available. If Mr. B is selling the goods to Mr. C in the same state, the same goods Mr. B is further selling to Mr. C. In that case, what will happen? Will the credit to Mr. B will be available of CST? His output for this transaction would be VAT from Mr. B to Mr. C. Will the input of CST be available? No, not available. So these all were the problem as we have discussed. We'll see. I'll come to the page number 1 and we'll discuss cascading effect of taxes on account of levy of non-VATable CST. See, I told you. The credit of CST was not available, beta. Credit of CST was not available. Then inclusion of SENVAT in the value for imposing VAT, as we have seen. For levying VAT, you have to include the excise duty. Tax on tax. No SENVAT after the manufacturing stage. Only the manufacturer was liable to levy excise duty and pay. After that, no SENVAT after the manufacturing stage. Mr. A was a manufacturer. He sold to Mr. B. He was a dealer. What the hell he is going to do with the excise? Nothing. He cannot take the credit. He is going to sell. The credit of excise was not available against VAT. So no SUNVAT after the manufacturing stage. Non-integration of VAT and service tax. There was no integration between VAT and service tax. Double taxation of a transaction is both goods and services. This is very interesting. The VAT department says restaurant is a supply of goods. Service tax said no, it's a supply of service. So what's the end result? The restaurant people used to pay both VAT and service tax. Both VAT and service tax, and there were many transactions like this. The VAT department is saying no, this is the supply of goods. Service tax department says no, it's a supply of service. So what will happen? They have to pay both the taxes. Double taxation, man. Double taxation. Non-inclusion of several local levies in state VAT such as luxury tax, entertainment tax, etc, etc. So many local levy taxes, luxury tax, entertainment tax, and all that. So there were non-inclusion. So there were so many deficiencies in the earlier tax law. So many. This was very important for a law to come. Which can provide a comprehensive and continuous chain of credit, and which made GST to come. So now we are going to study the concept of GST. This deficiency of GST, maybe it can come in a theoretical question, or like not very important, but it could come in a very small question like theoretical and all that. Now from now onwards, the important part, the GST comes. So what is GST? GST is a value added tax. No doubt it's a value added tax from a manufacture, sale, consumption of goods and services. For goods as well as services as well. For both goods and services, GST is available. No other taxes. There were so many indirect taxes. Many of them has subsumed into GST, and one law has come which provides at all the levy points, the manufacture, the sale, the provision of services, all has gone away. And the levy point under GST is what? Supply. Supply has come in. Only one levy point. It provides continuous chain of credit throughout the supply chain, from up to the retail or consumer level. We'll take an example for this. For example, Mr. A, we are not going to complicate it right away from CGST, SGST, IGST. We are going to discuss only GST at this moment. Later on, we are going to bifurcate, and slowly we are going to get up the CGST, SGST and IGST and all that. Mr. A sold goods to Mr. B for 1 lakh, on which GST will be levied now. For example, 10,000. For simplicity, I am taking 10,000. 10% is no rate under GST. So Mr. B has to pay how much to Mr. A? 1,10,000 he'll pay. What Mr. A will do? Mr. A will retain 1 lakh and 10,000 he'll pay to government. Mr. A paid 10,000 to government. Then the transaction flow continues. Mr. B sold the similar goods to Mr. C, for example, for 2 lakh. Mr. B is a wise businessman. He has sold the goods on a double profit, and the GST will be levied in this transaction again for 20,000, for example. So now what Mr. C will do? Mr. C will pay Mr. B 2,20,000. Out of which 2 lakh Mr. B will retain. Out of 20,000 he has to pay to the government. What is the output tax liability of Mr. B here? We'll understand. Output tax of Mr. B, 20,000 less ITC. Mr. B has already paid Mr. A 10,000, which has been deposited in his name to the government. Government knows Mr. B has already paid. 10,000 credit he will take, and the balance 10,000 he will pay to the government. Mr. B will pay to the government the next 10,000 rupees. Transaction moves further. Mr. C was a very smart businessman. He sells the goods to Mr. D. For how much? For here he sells it for 2,50,000. GST of, for example, 25,000 will be levied in this transaction. So total comes to 2,75,000, which Mr. D will pay to Mr. C. 2,75,000, out of which 2,50,000 Mr. C is going to retain. Rest Mr. C has to do what? Mr. C has to pay to the government. So we'll see how Mr. C will pay. Output tax of Mr. C is, Mr. C is working, I am doing Mr. C's liability. Mr. C has to pay to the government 25,000 rupees less ITC of how much? less ITC of how much Mr. C can take. Mr. C has already paid 20,000 rupees to Mr. B in term of GST. So less ITC of 20,000 he can take Mr. C, and 5,000 rupees he has to pay to the government. Who? Mr. C has to pay to the government. So Mr. C will pay to the government 5,000 rupees. So here total comes to how much? Total comes to how much? 25,000. Which is the final tax government has got? Which is Mr. D, we assume is a final consumer. Mr. D, we assume is a final consumer. Government has got the full tax. Isn't it a value added tax system? Each stage, how much value is added, how much tax is added, has been given to the government, has been deposited with the government. So here the government got 25,000, which is the final tax on the goods government get at each value addition. Government gets at each value addition the final tax amount, and the government gets how much, beta? The government gets 25,000 rupees. 25,000 rupees, which is the final tax on the goods and services. So it is a value added system. At each stage the value is added and the tax is added and is being deposited to the government. First thing. Second, it provides continuous chain of credits. Mr. B has got the credit of whatever is paid. He has paid to Mr. A. Mr. C has got the credit of whatever he has paid to Mr. B and deposited to the government. Mr. D is the final consumer. Final consumer is definitely not going to get the credit. You, me, we the final consumers does not get the credit. So here it is a comprehensive and continuous chain of credit from producer, servicer up to a retail and consumer level. Lastly, who is going to bear the burden? Ma'am, it is an indirect taxes. The final consumer, Mr. B, is going to bear the burden. For the students, I think most of you must have understood this. If somebody has not, don't worry. We are going to study many problems on this later on. Now, each person will get the credit of taxes paid at the earlier stage. The consumer will bear the final tax. This we have already discussed. Since the value at each stage is taxed, there is no tax on tax or cascading of taxes under GST, and GST does not differentiate between goods and services. The two are rates at the single rate. So, the goods and services, on both of them, the tax which is levied is what? GST. Unlike previous structure, previous law, there were so many other taxes depending upon if you are trading in goods, VAT was levied. If you are providing services, service tax was levied, and so on. So GST has a concept of one nation, one market, one tax, as Modi ji said. It will help us to compete with the global market as many countries. I tell you, 160 countries already had adopted GST, has already adopted GST. India was 161 to adopt GST. France was the first country who adopted GST. So we are studying what is the need of GST. This all is going to just develop your concept. It is very difficult that this kind of question will come in final level. If it comes, it's a bonus, but I don't find that these kind of question, the need or something will come. It may come somewhere in the MCQ in a different form. Just develop the concept. See, your exam is MCQ based. 30 marks for MCQ, 70 marks for the whole paper. So you have to develop your concepts very keenly. Just study whatever we are here going to discuss. Just listen to it very carefully, because out of these only concepts you have to apply something in the exam when the MCQ comes. Rest 70 marks paper will be of either case study or the practical questions or the theoretical questions. That we'll see how we have to write the practical questions, how we have to write the theoretical questions, and all those approach we are going to discuss in the class. Now next, VAT credit of excise and service tax were not available to retailers and VAT dealers. Credit of we have already discussed. The credit of CST was not available for the dealers, and it was very difficult in distinguishing between goods and services. For example, a restaurant service, software, work contract, and all that. Now in GST, government has made it very clear, like for work contract service, like for restaurant, it is a service, it is not goods. It is not goods. Now ma'am, now the GST has come, why there is a different need to differentiate between why a transaction is a goods or service? Because the provision for the time of supply and place of supply are different for goods and different for services. This we'll study later on also. Next, GST, a cure for ills of existing tax system. So now we'll see here what are the, we'll come to this point later on. Major taxes is which have been subsumed and norms assumed under GST. What has happened? Earlier, there was a tax. GST is a comprehensive tax structure covering both goods and services. In India, GST has come under dual model. What do you mean by dual model? Center also has the power to levy taxes and state also has the power to levy taxes. See what happened when GST came. The central government and the state government, our federal structure is like that central government also collect taxes, state government also collect taxes. Both the government collect taxes in order to fulfill their responsibilities. So central also collect taxes, state also collect taxes. When GST has to come, the center and state both has to forgo their earlier taxes, subsume their earlier taxes under GST. Then only the new tax will come. So the central government has subsumed these taxes and the state government has subsumed these taxes. This is one of the most important point in this chapter. In each chapter, I am going to tell you the A analysis part. In this chapter, this is. This can definitely come in MCQ or any form in the exam. You must remember this. We are going to study the memory technique of this as well. So what are the taxes which has been subsumed under GST? In central level, there were many taxes which has been subsumed like excise, central excise duty, additional excise duty, service tax, additional custom duty, central sales tax and central surcharges. These were the taxes which were levied by central government, which has to go and GST has to come. So some taxes has to go. So these taxes has been gone from central level. So the memory technique for this is CS, where CA stands for central excise duty, additional excise duty. These excise duty have been subsumed under GST. Then next CA stands for central sales tax, that is CST, in the interstate sales which is levied, and additional custom duty, and then come central surcharges and service tax. These were the taxes CS. At the central level, these taxes has been subsumed. Central government has subsumed these taxes. Now they are not going to get the revenue from these taxes. So state government also has to subsume some taxes. So state government has subsumed their VAT, sales tax, luxury tax and lottery betting, gambling, octroi, entry tax, purchase tax, state surcharges, all these. These taxes state government has subsumed. So in totality, I'll tell you the memory technique for this also. You must have this, you must have watched this movie PS I Love You. So PS Love is the memory technique where P stands for purchase tax, state government has subsumed. S stands for what? State surcharges. L stands for luxury taxes on lottery, betting and gambling. O stands for octroi and entry tax and V stands for VAT. These taxes, who has subsumed? State government has subsumed under GST. Now these taxes are no more, with exception to it, which we are going to discuss. Then there are some taxes which are not subsumed under GST, or they are called as the continuing taxes. Like the custom duty, basic custom duty, still there, stamp duty, still there, vehicle tax, still there, excise duty on liquor, still there. Liquor, there is a good case we are going to discuss on this. Government said if you are going to subsume excise on liquor, the taxes on liquor, we are not going to GST come only. We are not going let GST come only. So these taxes, the custom duty, stamp duty, vehicle tax, excise duty on liquor, electricity, taxes on sale and consumption of electricity, road taxes and entertainment taxes levied by local bodies. These taxes are still there. These have not been subsumed under GST. So the memory technique for this is Veer-CS. In Punjabi, what we call Veer as a brother. Veer-CS is the memory technique. So V stands here for what? Vehicle tax not being subsumed. Still vehicle tax is levied. Then E stands for excise duty on liquor, electricity duty, then the entertainment taxes 3E, R stands for road tax, and then CS stands for custom duty and stamp duty. These taxes are still there. So tell me friend, on state level which taxes has been assumed? PS-love. On central level, CS have been subsumed under GST, and the taxes which have not been subsumed under GST is what? V-CS. V-CS has not been subsumed under GST. So these were, this is important. This is important. Central government, very important from exam point of view. Mark it as very important. The MCQ can definitely come in this. Which taxes has been subsumed, which has not been subsumed. A theoretical question can come into it. This is very important from exam point of view. Just mark it as very important. Now, what are the benefits of GST? GST has come, I agree. But are there any benefit of GST? Yes, definitely. That's why the Modi ji has launched GST. Creation of unified national market, like India make GST aims to make India a common market with common tax rate and procedure and remove the economic barriers, thus paving the way for an integrated economy at a national level. See what has happened, I tell you. Earlier, there were so many taxes, so many VAT laws, 29 states, 29 VAT laws. For all the states, the VAT website was different. The tax rate for VAT was different. The return procedure was different. Everything was different. If a person want to do business in India, 29 states he want to do business, he has to take 29 VAT returns. If he is a trader, he has to take a 29 VAT registrations. He has to file 29 different returns. Each state has a separate rate. Now at least GST has maintained this much of the harmony, at least similar rate of taxes. Similar procedures are there, similar portal is there, www.gst.gov.in, from where you can do all the compliances. At least this much harmony has been maintained under GST. So, to make India a common market with a common tax rate, creation of unified national market, it's correct. Then mitigating ill effects of cascading, as we have studied, there was cascading effect earlier. Most of the central and state levy has been subsumed. Substituting most of the central and state into single rate by allowing set off of prior stage of taxes, as we have seen. Now I am providing GST consultancy service. Which example we have taken? The first example. Now I can take the credit of the laptop I have purchased, because on that GST is levied on the purchase. On my output consultancy services also GST is levied. I can take the credit. So the cascading effect, the mitigating ill effects of cascading is a benefit. Elimination of multiple taxes and double taxation, as you have seen. So many taxes. See, these all has come under only one tax. What? GST. These all has gone and one GST has been come. So there is a very good elimination of multiple taxes. And double taxation, like restaurant service, which we have already discussed. Now, no double taxation. There is only one tax, GST. So, now, GST has subsumed majority of existing indirect taxes levied at both central and state level. Say this is in order to create your base. Your exam would be MCQ based. Don't say, ma'am, how is this question going to come in the exam? Better you have to develop your base. From first chapter only you have to develop your base, and we will move till end. And definitely after 8 days you will be definitely confident about the subject that yes, I am going to score in this subject like anything. You have to score exemption in one subject if you want to score aggregate. Otherwise, it becomes very difficult. It really becomes very difficult. If you don't get exemption in one subject, it becomes very difficult to score aggregate and to get clear in the exam. You can get 40, 40, 40, 40. That is not a tough. But to get 200 is a challenge. And this will help you. The IDT is a subject in which you can score exemption. You can choose any subject of your choice, but I feel for IDT, it is really easy to score exemption. Many of my students has scored. So I can definitely tell you, if you sincerely do, if you sincerely study, if you complete the full books, the full question bank, then you do the revision, then you write the exam very properly, the concepts, you write the section numbers, and all the concepts has been properly written, there's a spark in the paper, the law language has been used, definitely you can score exemption. will study. You at the end of 8 days, you are definitely going to remember each and every sections, definitely. We'll start from section number 7 till section number 30 are very important, and which 100% will come in the exam, 100% that you are going to remember. So just give attention to the concepts because it is an MCQ based paper. Now, boost to Make in India initiative. GST will give a major boost to Make in India initiative of government by making goods and services produced in India competitive in national as well as international market. Definitely, when there is a common rate of taxes, previously there was state barrier. Like for example, in Maharashtra, particular goods is taxed at 10%. In Gujarat, it is taxed at 12%. So people will prefer to purchase it from Maharashtra. Now that is not the case. So internationally also, nationally also, GST will definitely going to boost Make in India initiative, and it is going to definitely increase the government revenue in long run, since the tax base has been widened. In excise, at 90 lakhs you have to take registration. At 90 lakhs you have to take registration. Under GST, 10 lakhs, 20 lakhs, 40 lakhs is the limit. So you can see how many people have come under the umbrella of GST. So these were some of the benefits of GST. Now what happened? We'll study a story to understand how the GST has come, like CGST, SGST Act, how the acts have come. CGST Act 2017 has come, then SGST Act 2017 has come, then UTGST Act 2017 has come, IGST Act 2017 has come, and GST Compensation Act has come into force. Now we'll understand how, why they have come, like why they so many acts and all that. So now what has happened, I tell you. In case of central government and state government, our country is like that, that both the governments, our country is like that, that both the governments has done what? Has sacrificed their taxes. Yes ma'am. Excise, for example, central government has sacrificed. Service tax, they have sacrificed. State government has sacrificed VAT and all that which has been subsumed under GST. So central government has also subsumed their taxes. They have forgotten their revenue. They are not anymore going to get revenue of service tax, excise. State government will also not get the VAT revenue. So what has happened is, when the GST has to come, how it has to come? First of all, Kelkar Force has recommended national GST, that only one GST should come. One GST, only one GST, no CS, nothing like that. So the point was, who will collect this GST? The central government said we. State government said why? We have also forgotten our VAT. We are not going to get any more revenue of VAT now onwards. Why will we not get the share of GST? So central government said that who will collect it? We will collect it, then we will pay it to you. State government said no, we don't trust you. In this we don't trust you. If you don't pay us, then, for example, there is a different government, BJP in center and state has Congress, you will hold our funds. And if you don't pay us, we can't trust you. So central government said, tell us what we need to do in that case. Central government, state government said that we need our share. So after many discussions, 75-25 and all that, the come ki 50-50 share between center and state government. State government was very reluctant. We need share on transaction only. We don't trust you. That central government said that we will collect for the month whole GST revenue and at the end of the month we will pay you. State government said no, we don't trust you. Then central government said what to be done. State government said, when you will sell the mobile, whenever a person, a supplier is selling the mobile, a trader is selling the mobile, at that point only we have to split the transaction, your revenue will come to you, our revenue will come to us. For example, our mobile of 1 lakh rupees is sold. At this, if the total tax is 10,000, so CGST, which you know very well, CGST, Central Goods and Service Tax of 5,000 and SGST of 5,000 will be levied and will come to us. Center will get its share, state will get its share on transaction level only. No monthly settlement, nothing, at the transaction level only. The supplier will charge CGST and SGST, he will collect in and it will be paid to the respective government transaction wise only. Transaction wise only. So this was one discussion. So the looking into the federal structure of the country, since central state both need taxes revenue because they have their own responsibilities. Looking into the federal structure of the country, a dual model GST has to come. What do you mean by dual model? Center also has the power to levy taxes and state also has the power to levy taxes. The first recommendation was only GST. If a transaction of 1 lakh is there, 10,000 only GST. But this couldn't come in India, which is called as national GST. India, due to its federal structure, has to implement dual GST. That means center also has the power to levy taxes. State also has the power to levy taxes. Both the government will levy their own taxes, and it will be paid to both the government on the same transaction. Clear? Now, so here comes the taxes. First is CGST Act 2017 and SGST Act 2017. So on any transaction of intrastate, what do you mean by intrastate? Within state. In simple language, we'll discuss later interstate definition. In simple language, when there is a within state transaction, two taxes will be levied, which is called as CGST plus SGST. CGST plus SGST. Now come, if there is a union territory, for that UTGST Act come. UTGST Act 2017. What will be levied in case of union territory transaction? For example, there is a supply from Andaman Nicobar to Andaman Nicobar only. Which tax will be levied? In that case, the tax that will be levied with for union territory CGST plus UTGST. UTGST is just a replacement of SGST. For that, the act which has come is UTGST Act 2017. For intra-state transaction, CGST plus SGST. For intra-union territory, CGST plus UTGST. So, this was one thing. Now the second thing comes. What will happen in case of interstate transaction? What will happen in case of interstate transaction? For example, Mr. A is supplying goods to Mr. B. Mr. A is of Maharashtra. Mr. B is of Gujarat. So what will happen in this case of transaction? So I tell you one more thing. First thing, you understood that we have implemented dual model GST, that is center also has the power to levy taxes, state also has the power to levy taxes, that is CGST and SGST. Now comes, we have moved from origin based tax system to destination based model. We have moved from origin based to destination. This is very important concept. You must remember it. Now, what is this, ma'am? Origin based to destination based. What the words are you using? So, previously, if we take a transaction of a previous era, that is before GST. If Mr. A sold goods to Mr. B in Gujarat in previous era, which tax was levied? You must be knowing, we have discussed थोड़ी देर पहले, we have discussed a bit before, CST. Which tax was levied? CST. So CST is the revenue of which government? CST is the revenue of which government? Origin based government, that is Maharashtra. In previous era, we have origin based taxation system under CST. So the revenue belongs to Maharashtra government. Revenue belongs to Maharashtra government under the previous era in this particular transaction. So when the Maharashtra is getting the revenue, Gujarat said, why we will give you credit, Mr. B? You have paid the taxes to Maharashtra government, not to the Gujarat government. Why we will give you credit? That's why the credit of CST was not available. That's why the credit of CST was not available. The cross credits were not available before because of this reason only. Because this government, if the government is not getting the revenue, why they will give you the credit? So this was the biggest problem. In India only the things were becoming competitive in interstate. So there was a need to switch it. So the government has switched from origin based tax system to destination based model. That means what? Now under GST era, if there is an interstate transaction, the revenue will go to whom? The revenue will go to the consuming state or the destination based state, now destination state. that is under GST. In this example, the revenue will go to the Gujarat government. So the Gujarat government do not have problem to give credit to Mr. B. Because Gujarat government have got the taxes. So now in case of interstate transaction, which tax is levied? Beta, the tax which is levied now is IGST, of which the credit is available. To Mr. B. The IGST is levied. IGST is collected by whom? IGST is first collected by central government and it is distributed to the respective consuming state, that is Gujarat. The central government will collect this IGST. This IGST will be collected by central government. State government agreed on this ki theek hai. It will be collected by central government and then it will be distributed between central government and consuming state or destination state in the ratio of 50-50. And this was the concept of what? Destination based model. And here comes the act, IGST Act 2017. IGST Act, these 4 acts, CGST Act, SGST Act, UTGST Act and IGST. And the last is what? Last is GST compensation cess. Now what is this GST compensation cess? So in this GST compensation cess, what happened? In this case, the Maharashtra government was in tension that, oh my God, we are not going to get any more the revenue of CST. We may make losses. So the government said, don't worry. The origin based state may get losses. So if you get losses due to the implementation of GST, we will set off your loss by what? We will collect GST compensation cess from sin goods or luxurious goods, and we will pay it to the government who get lost due to the implementation of the GST. And here comes what? GST compensation cess. So these were the 5 acts which has come. CGST Act 2017, SGST Act 2017, UTGST Act 2017, IGST Act 2017 and GST compensation cess, and this is the body of GST law, these 5 acts. Now the next is framework of GST as introduced in India. We are going to touch each aspects of GST, we'll check. First is how, in which model GST has been introduced. Man, dual model, we know it very well. Dual model GST has come into India. That means what? The taxes are imposed concurrently by the central and the state government. India has adopted dual model GST in view of federal structure of the country. Consequently, central and state simultaneously levy GST on taxable supply of goods or services which takes place within that state or within that union territory. The tax is imposed simultaneously by state and center. So now here, in case of intrastate, tell me again, in case of intrastate, which tax is levied? CGST plus SGST. In case of intra-union territory, which tax is levied? CGST plus UTGST. Here we'll take that example. For example, the total rate of tax is 18%. In case of intrastate transaction, which tax will be levied? CGST plus SGST. Here CGST will be 9%. And SGST will be 9%. Now, in case of intra-union territory, for example, Lakshadweep to Lakshadweep you are going to supply, then the transaction will involve CGST levied and collected by central government 9% and UTGST levied and collected by union territory at the rate of 9%. Then there is an interstate transaction. Interstate transaction, which tax will be levied? IGST, and the rate would be 18%. And then, for example, Andaman Nicobar to I am supplying to Maharashtra, then in that case what tax will be levied? In that case also IGST will be levied at the rate of 18%. There are multiple rate of taxes. In the exam, if 18% is given, you have to split it between, if there is an intrastate transaction, CGST and SGST. There are some rates of taxes in India are 5%, 12%, 18%, 28%. Majorly these are the tax rate which will be given in the exam. You have to check, like if 5% is given and there is an intrastate transaction, you have to levy 2.5 and 2.5 and so on. This we are going to discuss in detail. We'll discuss. Next is Is GST applies to Jammu and Kashmir? Yes, GST extends to whole of India, including the state of Jammu and Kashmir. In India, GST got implemented on 1st July 2017. After so many discussion on 8th July 2017, Jammu and Kashmir also accepted and agreed for GST, and they have also adopted the same. As we have discussed, GST is what? Destination based. What do you mean by destination based? Consuming state will get the revenue of taxes. So GST is a destination based tax applicable on all transaction involving supply of goods or services for a consideration subject to exception thereof. In case of interstate transaction, as we discussed, IGST to be levied and collected by central government, and it will be apportioned with what? Consuming states. Intrastate supplies, CGST and SGST. CGST collected by central government, SGST collected by state government. In case of intra-union territory, CGST plus UTGST. UTGST collected by union territory without state legislature. Union territories without state legislature. What is the legislative framework? We have discussed already. Like there is a single legislation, CGST Act, for levying CGST. For levying CGST, there is only one act, CGST. For 29 states, there are different SGST Act, Maharashtra SGST Acts, then Gujarat GST Act and all that, every state. Definitely, the valuation, classification, procedure, everything is same. Harmony has been maintained. There are multiple state legislature. The basic feature of law, chargeability, definition of taxable, even taxable person, classification, valuation, everything is same and uniform in all the SGST legislation. But definitely for every state there has to be a different legislation, there have to be a different act. For Maharashtra there is a different act. All the provisions are same, but state wise there are different acts. So all the states have different acts, the union territories have different acts. For CGST there is only one act, CGST Act 2017. IGST there is one act, IGST Act 2017. Goods and services. The goods and services here, they are classified on the basis of HSN. This is adopted from US. Harmonized system of nomenclature. Every goods will have some or the other code that is called as HSN. With this we are going to discuss in detail. Registration, composition scheme and manner of utilization. We have a separate chapter for it. In which we are going to discuss this in detail. But just to have a brief idea, we will discuss few points over here. Then we have very important chapters, no doubt these. In exams, some or the other questions come from these chapters. So composition scheme, you must have heard at the final level what is composition scheme and all that. In GST regime for intrastate supply, in GST regime, GST is payable by every taxable person, and in this regard provision has been prescribed in the law. So every taxable person has to pay GST. However, for providing relief to small businessmen making intrastate supply, a simpler method of paying taxes and accounting thereof is also prescribed, which is known as composition levy. See, for making similar compliances for Tata Group and for a small retailer is not justified. Therefore, the government has come up with a scheme for a small taxpayers, very small businessmen who are making intrastate supply, within state supply of goods. For them, they have come with a scheme like they can make a quarterly payment of taxes, they can file annual returns and all that. Unlike, for example, Tata has to do monthly compliances. So it would be very burden for a very small businessmen. For them, a scheme has come which is called as composition scheme, which we are going to discuss definitely in detail. Then registration. What do you mean by registration? Because registration is the first step towards compliance of any law in any country. Until you don't get registered, how you will file returns, how you will make payment, how anything could be done, first you have to register. Now, when to register under GST? Is there any limit? Yes, all these we are going to discuss in registration chapter. Currently, the limits are 10 lakh, 20 lakh, 40 lakhs, depending upon you are providing good services from which state you belong. This we are going to get in detail, the threshold limits. The threshold limit of aggregate turnover for exemption from registration and payment for supplier of service would be 20 lakhs, 10 lakhs and all that. This we are going to see. So depending upon the threshold limit in the state you are, you have to take the registration. Threshold limits for aggregate turnover for registration and payment for supplier of exclusively goods has been increased to 40 lakhs. So as I told, currently there are 3 limits. We'll see registration chapter for detail. So when to register, when not, when to apply for cancellation, when registration will get suspended, what is the procedure for registration, what will happen if I don't register, all these questions will be answered in our 10th chapter, which is registration. Then manner of utilization of credit, this we'll see right now. See, now you must have understood there are many taxes: IGST, CGST, SGST, UTGST. These are the major taxes. So what is the manner of utilization of taxes? Which credit can be taken for what and how it could be utilized? So we'll see only basic over here. Detailed discussion of this would be done in payment of tax chapter. Input tax credit of IGST. When IGST is levied in case of interstate transaction. For example, I have purchased goods from Gujarat. Which tax will be levied? IGST. Can I take the credit of the same? Yes, you can take. Anybody can take the credit of IGST. So that IGST credit, the IGST input tax credit, I can use it for payment of IGST first, then CGST and SGST, in any order, any proportion. So first, the IGST credit should be used for the payment of IGST. Second, for payment of CGST or SGST, any order, any proportion. I can use the balance IGST after paying of IGST liability for payment of either CGST or SGST. First SGST, then CGST, anything, any order, any proportion. But I have to completely exhaust IGST. After ITC of IGST has to be completely exhausted mandatorily. I have to completely exhaust what? IGST. IGST I have to completely. When IGST balance is nil, after that, when IGST balance is nil, credit of IGST, ITC of IGST is nil, then I will move forward. Then what I have to check? I have to see CGST credit. CGST credit I can use first for CGST, then for IGST. Similarly, SGST credit I can use first for SGST, then for IGST. But there is one restriction. What? That ITC on account of SGST should be utilized towards the payment of IGST only after ITC of CGST has been fully utilized. After your CGST is nil, only after that you can use SGST for the payment of IGST. And the last restriction is C cannot be used for S, S cannot be used for C. CGST cannot be used for SGST, ITC of SGST cannot be used for output CGST. Why? Because one is central levy, one is state levy. Difficulty in doing hisab. So for this, again. First of all, what you have to do, you have to see IGST. IGST credit should be used first for IGST, second for CGST or SGST, any order, any proportion. Then comes the credit of CGST, which can be used first for CGST, then for IGST. Credit of SGST can be used first for SGST, then for IGST. Then after that, ITC of CGST cannot be used for SGST and SGST cannot be used for CGST. This is the only restriction. One more thing, ITC on account of SGST should be used towards the payment of IGST only after your ITC of CGST. After the CGST has become nil, after that only you can use SGST for the payment of IGST. I hope this is clear. If this is not clear, we are going to do some problems on this in the chapter payment of tax. At that time it will get clear, and in this question bank also of chapter number 1 there is a question on this that we are going to discuss. So this is what? This is manner of utilization of credit, composition scheme and registration. For these 3 topics there are 3 different chapters and very important chapters. Next is seamless flow of credit. This we have already discussed. GST is what? A destination based consumption tax. So revenue of this we have already discussed. The revenue goes to what? Consuming state. Therefore, the consuming state will allow you the credit of IGST. The buyer in the importing state is allowed to credit of IGST paid on interstate purchase made by him. This we have already discussed. So we'll read this once since we have discussed. Since GST is a destination-based consumption tax, revenue of SGST ordinary accrues to consuming state. The interstate supplier in the exporting state is allowed to set off the available credit of IGST, CGST, SGST against IGST payable on interstate supply. This we have seen. IGST can be credit, can be used for IGST, CGST or SGST. The buyer in the importing state is allowed to avail the credit of GST paid on interstate purchase made by him. Thus, unlike earlier scenario where credit chain used to break in case of interstate on account of levy of CST, under GST regime there is a seamless flow of credit in case of interstate supply as well. The revenue of interstate does not accrue to the exporting state, and the exporting state transferred the credit to SGST, UTGST using the payment of IGST. As I have told you, the center transfer to the importing state the credit of IGST used in that consuming state, destination based state or the importing state. That interstate transaction of goods or services needed robust settlement mechanism amongst the center and state, and for this a common portal was required. This GST common portal, you must have seen it, www.gst.gov.in. It performs many functions. One of this is claiming the settlement between the states and the centers. We'll read it once. A common portal was needed which could act as a clearing house and verify the claims and inform the respective government to transfer the funds. This was possible only with the help of strong IT infrastructure. Definitely, there are so many interstate transactions. The government has to do the settlement on the basis of who can do these settlement. So this common portal helps the government to do this. A common GST portal, www.gst.gov.in, a website managed by Goods and Service Tax Network, which is GSTN, has been set up by government to establish a uniform interface for the taxpayer and a common shared IT infrastructure between center and state. What are these functions? Like facilitating registration. Obviously, you can log into the portal, you can do the registration by yourself. Forwarding the return to central and state government authorities. You submit the returns. Forwarding the return to the central government state authorities is the function of GSTN. Is the function of GSTN, Goods and Services Network. Computation of settlement of IGST. This is one of the function. The IGST, it needs a robust mechanism. So many sellers, so many states involved. The settlement between these, computation and settlement of IGST is one of the function. Matching of tax payment details with the banking network. Whatever the payment you have made, the matching of these tax payment detail with the banking network. Providing analysis of taxpayer profile. Running the matching engine for matching, reversal, reclaim of input tax credit. All these things are what are done by GSTN. So the strong IT infrastructure was needed, and which is what there is managed by GSTN. So this was regarding a destination based state and seamless flow of credit and GSTN common portal. Now, genesis of GST in India, how GST has come into India and all that. I will definitely not require you to remember these dates. These are just given over here, but you really need not remember. Institute is not going to ask this in MCQ as well. The dates and all that, they are going to ask you the case study based MCQs, or which requires application of your knowledge. Those kind of MCQs would be asked in the exam, like which involves application of knowledge. Even if it is not case study, but they are definitely not going to ask you the section numbers or the dates and all that. So you need not remember, just we are going to read it once. So as I've told you, France was the first country to implement GST in 1954. In 1954, France implemented GST at first. And after that, around 160 countries, more than 160 countries has implemented it. India has implemented in 2017. First of all, I have told you the national GST, only one GST model has been suggested by Dr. Kelkar for task force in 2004. And thereafter there were so many deadlines in which GST has been proposed, the revival, the Constitution Amendment Act and all that has been moved. The CGST bill has been introduced in Lok Sabha and all those dates. Thus, like we can see it for a minute, the GST has been proposed in 2007-8. Then there is a GST Constitution Bill, Constitution Amendment Act, and then comes the CGST Act. Finally, the GST has, after so many deadlines, after so much discussion between the states and the center, finally the GST has been rolled out on which date? This you can remember. 1st of July 2017, GST has implemented across India except Jammu and Kashmir. On Jammu and Kashmir, GST has been implemented on 8th of July 2017. On 8th of July, GST has been implemented in Jammu and Kashmir as well. So you can remember these two dates, not more than this, not required, not at all. It should not come in exam. Now, there are many constitutional amendments which has to come when GST has come. When GST come, there were some articles before also that we'll discuss, and what were the constitutional amendments after that we'll discuss. So you must have studied Article 240 to 65 first also, taxes not to be imposed save by the authority of law. That means what? There are some constitutional provisions. This was previously also there. This we'll discuss. So to levy any taxes, no taxes shall be levied or collected except by the authority of law. So the Article 245 empowers Parliament to make law for whole or any part of the territory of India. Parliament can make law for whole or any part of territory of India, and legislature of every state can make law for whole or any part of India. Now there was an Article 246. This is important. This is important. There were three lists, if you remember: union list, state list, and concurrent list. What is union list? This list enumerates the matter in which Parliament has an exclusive power to make law. Who? Parliament has to make an exclusive power to make law. List 2 enumerates the matter in which legislature of any state has an exclusive right to make law. Legislature of any state has the exclusive power to make law. And list 3, concurrent list, in which Parliament and legislature both can make the law concurrently. But this list fails. This article fails due to the introduction of GST. Why? Because under GST, both center and state government has to simultaneously make the law. List 1 gives power only to union. List 2 gives power only to state. List 3 gives definitely power to both of them. But in this, the matters which are there are not related to tax, that are related to forest, education and all that. So this list failed. This article failed for introduction of GST. So there comes a new article, constitutional amendment for GST, insertion of some new articles we will see. Notwithstanding anything contained in Article 246, 254, Parliament and the legislature of every state has the power, Parliament and state both has the power to make law with respect to goods and service tax imposed by union or by such states. Now this Article 246A gives power to simultaneously to Parliament as well as legislature of every state, that they can make goods and service tax law, to the tax to be imposed by them in case of goods and services. And Parliament has an exclusive power to make law in respect of to the goods and service tax where the supply is of goods or services takes place in the course of interstate commerce. So this is one of the article which has been introduced now. This article 246, which has failed, because of which the Article 246A has come. Now what this article is, tell me one thing, is excise still there? Yes or no? Yes, on few products. Is VAT still there? Yes, on few products. Like duties of excise on following goods manufactured or produced in India, like these PHMNA items, I would say. This is the memory technique. Petroleum, high-speed diesel, motor spirit, natural gas, aviation turbine fuel, and tobacco products. On the manufacturing of these products, still the duty which is levied is excise and not GST. Why, ma'am? Because state government said, we are not going to subsume these products under GST. We don't want. Similarly, on the sale of these products, petroleum, high-speed diesel, motor spirit, natural gas, aviation and alcohol, on the sale of its VAT or CST will be levied. On the manufacture of it, what will be levied? On the manufacture of it, excise will be levied. You can see this in this table. This is very simplified table. This will help you. On these, first we'll talk for these 5 products. Petroleum, high-speed diesel, motor spirit, natural gas and aviation turbine fuel. On the production of these 5 products, the duty which will be levied is central excise. And on the sale of these articles, the duty which will be levied is what? VAT or CST. In case intrastate, VAT. In case of interstate, CST. Why is this, ma'am? Because the government were like, if the GST does not give revenue, these were the highest revenue generating item for them. So if GST does not give revenue, then that would be a problem. So government said we'll check, the state government said we'll see for 2-3 years. When the GST revenue will get okay, then we'll subsume these products under GST. We don't have any problem. We will subsume these taxes into GST. Give us some time, maybe 2 year, 3 year, 5 year, maybe. So on these products currently, petroleum, high-speed diesel, motor spirit, natural gas and aviation turbine fuel, on these products GST will be levied from the notified date. Right now, on its manufacturing, central excise is levied. On its sale, VAT or CST is levied. 5 products, PHMNA. Now comes product alcohol, alcoholic liquor for human consumption. This is completely outside GST. This has been kept outside the levy section. Levy section will come section 9. This has been kept outside GST from the levy section only. Government said, state government said, if you know, under alcohol, the excise is not central excise, it's state excise. It is the revenue of state government. VAT and CST is also the state government revenue. So on the production of alcohol, excise duty, state excise was levied. State government said, if you want to merge alcohol under GST, we won't let you come GST only. We won't let you get the GST into rule. So in this case, what should be done? What should be done? So government said, okay, we can keep completely, alcohol will never come under GST. Alcohol cannot come under GST. It has been kept out of the levy section only. If it has to come, there has to be many constitutional amendments. So alcohol, what you have to remember? You have to remember that alcohol has been kept outside the GST. Outside the GST. So it is completely outside GST. So on production of alcohol, the duty which is levied is state excise, and on the sale of alcohol, the duty which is levied is VAT in case of interstate sale. In case of interstate sale, the duty which is levied is CST. Now, alcohol, state government has taken. What happened to tobacco and tobacco products now? Last, tobacco and tobacco products. When state government said we will keep alcohol, central government said we will keep tobacco. So, on tobacco manufacturing, tobacco is really important. Tobacco is really important from exam point of view. On tobacco's production, central excise is levied. Central excise is levied, and on its sale, GST is levied. On its sale, GST is levied. Correct? On its sale, GST is levied. Like if it is interstate, then CGST is GST, and in case of interstate, it would be IGST. So, tobacco and tobacco products, because it has excise and GST both, this is only one product on which these two taxes are levied. So, this is very important. In this chapter, as I have told you, taxes which has been subsumed and not subsumed under GST, and this taxability. This is very important. So, these are the products in which has been summarized in the table in the next page, which tells which are the products which are on which the earlier taxes are imposed up till now. And the last thing in this chapter is Goods and Service Tax Council. Goods and Service Tax. This article 269A also has been introduced, which tells that goods and service tax on supply in case of interstate trade or commerce shall be levied and collected by the government of India, and such tax shall be apportioned between the union and state in the manner as may be provided by Parliament on the recommendation of the GST Council, which is currently what, 50-50 mein it get apportioned. That IGST get apportioned in the ratio of what, 50-50 now. And the last is GST Council. See, GST, what is GST Council? What is its composition? What is its role? How it is constituted? We'll see this. You must have heard there are so many meetings of the GST Council is there. They provide so much recommendation to the government and all that we'll see. So, the Article 279 of the Constitution empower whom President of India to constitute a joint forum of center and state. Center and state both came together, make a joint forum which is called as GST Council. The provision relating to GST Council came into force from 12th of September 2016. So, the chairperson is Union Finance Minister of India will be the chairperson. Members will be the Union Finance Minister of State in India of Revenue or Finance, and the member will be the minister in charge of finance or taxation or any other ministry nominated by each state department. From each state department, there will be the members who will be the vice chairperson. The state finance minister shall choose amongst themselves as vice chairperson of the council for such period as they may decide. What are the rules? What they will do? Now, this is important. Now this is important. What will be the roles of GST Council? So GST Council will make the recommendation to the union and states. They will make recommendation for the taxes, cesses, surcharge levied by union and local bodies which may be subsumed in the GST that they have given, the goods and services that may be subjected to or exempted on which the tax will be levied, which will be exempt for tax. For example, milk is exempt from tax, fresh vegetables are exempt from tax. So these recommendations, who provides? GST Council. Model of goods and service tax law, principle of levy, apportionment of goods and service tax levied on supply in case of interstate, in which ratio it should be like apportion, what will be the model, what will the principle of levy, the threshold limit of turnover below which goods and services may be exempted, like 10 lakh, 20 lakh, 40 lakh right away, the rates including the floor rates for a specified period to raise additional revenue resources during natural calamity, special provision with respect to special category states. There are many special category states that we will discuss later. Any other matter relating to any, there could be any matter. They can provide recommendation to the government for any matter. The GST Council shall recommend the date on which the goods and service tax will be levied on these items: PHMNA, that is petroleum, high speed diesel, motor spirit, natural gas and aviation turbine fuel, because currently they are not under GST. They will come into GST from a notified date. So this date GST Council will tell. While discharging the function confirmed by this article, the goods and services shall be guided by the need of harmonized structure of goods and services for a development of harmonized national market for goods and services. So there will be meetings of the Goods and Service Tax Council, and they would be giving recommendation on all these things. What will be the quorum? 1/2 of the total number of members. Half of the total number of members should be the quorum. The procedure. The GST Council shall determine procedure and the performance of their function. Decisions to be taken by not less than 3/4 of the weighted votes. Every decision of the GST Council shall be taken at the meeting by majority of not less than 3/4 of the weighted votes of the member present and voting in accordance with the following principle. Okay. The vote of the central government will be the weightage of 1/3 vote cast, and the weight of the state government would be the 2/3 of the vote cast. We'll see a problem in this question and answer book regarding this. And the settlement and dispute, the GST Council will establish a mechanism to adjudicate any dispute which will arise between Government of India or one or more state, the Government of India and any states on one side and another states on another side, and between two or more states. Any settlement will come, the mechanism to adjudicate that dispute will be recommended by whom? The GST Council. The role of GST Council is very important. Nothing could be done under GST beyond the recommendation of GST Council. GST Council will provide recommendation on each and everything. So this was our discussion regarding our chapter number 1, and after this we are going to discuss the question bank, the important questions of the chapter. This chapter we are going to discuss. So this was regarding our chapter GST in India and introduction. I hope you must be very clear regarding the discussion on this chapter. So this in the similar manner we have studied this chapter. In the next lecture we are going to do what? We are going to discuss the question bank, the important questions of this chapter, and so on. This course we are going to cover full, as I told you at the starting of the lecture, in the 65 hours, out of which 55 hours we are going to cover whole GST with question bank. Important questions we are going to discuss, and then customs with question bank, important questions of FTP and customs we are going to discuss over here. And in 65 hours we are definitely going to cover and touch each and every concept we will discuss. And even if you are studying GST for the first time, you will definitely able to get the full grip on the subject. So friends, we'll stop our discussion over here. Thank you for now.